Eric Mwadid, Mwadid.com. As we come close to the end of this day, January 28th, 2016, we are looking here at Facebook with a strong gap up this morning. Right now, up about 15-16%, and it is doing its best to close at all-time closing highs on a daily basis. So here is an attempt to hold above the previous daily closing highs. Now, I'll tell you what I think here is a couple of observations. If we go to the weekly, the real test, in my opinion, is whether it can hold above the recent all-time weekly closing high. So anything above 107.32, then the stock has a chance of moving higher. Now watch this, because if it cracks back below 107.32, it would suggest that the weekly breakout is failing. And could that be the case? I think it is very likely. But before we do that, you'll notice here that on a weekly basis, and we are touched on this the last couple of weeks, stock's been coming back to the 50 level on its weekly RSI and holding. And this is where, on hindsight, and even in real time, we've been watching these areas for re-entry, and we are seeing another uniform activity below 50 back above it. Yes, we talked about that before it happened. Now, what I'm trying to say here is that the entry here was not easy, of course, because of this huge gap up today. But what I'm like us to watch, because it's an easy way to track this, is just watch this recent weekly closing high above 107.32. The stock might have a chance of moving higher. But if it moves back below that threshold, there might be a reason to suspect that that's all there is. Why? Because number one, even though we are making a fresh weekly closing high attempt, today's Thursday, we have tomorrow, but if it can close at new highs on a weekly closing basis and still show this negative divergence, keep in mind that right now the RSI is close to 61.8. If it stalls in the coming week or so, back below and showing this negative divergence look like that, then this would suggest that this is as high as you go. That's the weekly chart view. Take a look at the daily. Now the daily, if we go back to the highs here and here, you can see that those highs took place with the RSI breaking down right there. On both occasions, we can see the breakdown here in the RSI brought it off the highs here from about 90s to the lows here in August of 72. Again, there was another break of a trend. This break here brought the stock off the most recent high here, all the way from, let's call it 108, 109, 110, all the way to the lows of 90 here. And now we are back to this red level here. Keep in mind, again, it so happened to be at about 61.8. So at this rate, if it can pull back in the next day or so and show resistance at that line on the red line, resistance here would show that this is as high as it goes. And take a look at the hourly, and the hourly is showing that if you take this high here in November, which is where the RSI broke down here, so this break in the RSI brought the stock off the highs there, and of course we moved from the 110 level all the way to the lows here at about 90 bucks. So if we draw a line from here, you can see that if this continues to be the case where we are seeing uniform activity above the red line and back below it, so a rejection there back below the red line, and also rejection at 69.1, excuse me. If this is also showing rejection, then I think somewhere around here the stock could stall. And you can also see intraday, we are coming back to test the intraday highs. If we can't hold above those intraday highs just under 110, then we are looking at a double top, and another reason why this could stall. So really, as of right now, I'm personally leaning towards a pullback. But the key, in my opinion, is just keep it simple. Above 107.32, the previous weekly closing high, the stock is a buy. If it moves back below 107.32, the stock is gonna stall. Eric Mwadid, Mwadid.com. As always, good luck, peace, and blessings. I am out. Woo! Yeah.